Let's start on the China question then that Kriti raises. The loan prime rate unchanged, not a big surprise given that the PBOC held their main rate, a week ago? So why the further downside coming through for Chinese equities? Starting to look and starting to resemble panic now when you look at the moves that we've seen.
Yeah, and the most obvious answer for markets is always more sellers than buyers when we're going in this direction, Tom. But I think that that's really the case here. You know, we've been seeing this big exodus of international investors. We've also been seeing local funds closing down or being liquidated as well. So that's draining more of the investment from the Chinese equities market. Now, one other thing going on under the surface, which is really interesting but quite nebulous and difficult to unpick, is this idea of so-called snowball trades or structured products. And those are typically higher yielding sort of investments that you can make that will pay you a decent yield just so long as certain conditions are met, which are usually a long way out of the money when they're struck. So a big decline in equities is one of them. And compared with where we are when some of those deals were arranged, they're now falling to the bottom of that, to what's called a knock-in level. It's not entirely clear whether there are people deliberately targeting those levels to try to push the market through them, or whether as we ping through those levels, it's exacerbating the selling pressure. But between the two of them, the snowball products are actually triggering some of this snowball effect that's having that downward drag on the Chinese equity markets.
So that's the Chinese equity market. But then let's go cross-asset here, Paul, because when you see this kind of risk sentiment in the other parts of the world, commodity markets are usually in line with it. You're not just seeing the oil price, you're seeing it in natural gas and agricultural commodities. Why is the commodity sector left out of it? Is there a China read-through as well?
Yeah, well, I think commodities is really interesting because with all of the risk-off news that we had around the Middle East over the weekend, you might expect that there would be something of a rally in the oil market today. Instead, it's all about the supply-demand dynamics again, really. You know, more sellers than buyers again here. We've got a big Libyan oil stream coming back online, and that's putting more crude oil supplies into the market. We've got relatively subdued and complacent natural gas consumption across Europe, partly because of the economy, but partly also because but this last week accepted we've had pretty benevolent weather conditions too, and plenty of gas still in storage. So all over it, commodities still kind of the demand isn't really taking it higher, and the supply is kind of comfortable. So we're sitting in this kind of stasis level.
Paul, very briefly, the BOJ, of course, that decision tomorrow, and then the ECB on Thursday. Where is your focus?
Yeah, I think we're going to be looking very carefully at the BOJ's guidance. What are they going to be telling us about the timing of liftoff? Are we getting closer? Are they confident in the economy? ECB, I think Lagarde has been very clear on we're waiting until the summer. So, you know, we might well take a pass on this one. Rendezvous in the next few meetings, as Tricia used to say.